My guest today on the spot is Frank Holmes of U.S. Global Investors. We'll be talking about how gold broke through that 200-day moving average. Shouldn't everyone be rejoicing? He's up next. Frank Holmes now joins us from San Antonio. Frank, thanks for being with us. Let's start by looking at some of those big moves we saw in gold. Starting with last week, we had started the week off at $12.75. We ended around $13.20. That's around a 4% change for gold. We also saw some big moves for the miners. Is this a sign of a change happening here now, Frank?
I think so. I think that there's been so much change last year of a focus on senior mining companies or junior mining companies to cut costs, to streamline. There's been many CEOs have lost their jobs. There have been board of director changes, etc., from Barrick right down to juniors to deal with the sort of the cleansing that was taking place in gold stocks. Now with gold going above the 200-day, there's a bit of sentiment relief, and it's positive. I don't think it's runaway bullish. So still a lot of doubting Thomases on gold. So I think investors ought to be taking a look at those stocks that had the biggest moves, whereas where there's a lot of undeclared shorting, and there was shorting in these stocks. You saw companies like Grand Columbia jump 41% last week. There's no fundamental significant changes or results that have been printed out in the marketplace to justify that, except for the stock was extremely punished and was trading at a 90% discount relative to its peers. You had LA Nevada, you had Dundee Precious. These stocks had spectacular moves, and usually gold to gold stocks, the ratio has been 3-to-1. A 1% move up in the price of gold, a 3% into gold stocks. So some of these other names have had these remarkable moves, like Detour is up 300% from its lows in the past 3 months. I think that's important for investors to recognize it has bottomed.
So Frank, did some investors leave the party too early or late?
Well, they left the party late, and now they're going to miss it. They waited till the punishing December when all the tax loss selling. And remember, it's only happened 3 times in 3 decades that gold stocks fell for 3 years in a row. And those that persevered through last year were remarkable. So you got to clap to those people that have run through. I like to give the metaphor. They came out to run a 10K, but they were running a marathon.
Now, here at Kitco News, we did cover when gold broke through the 200-day moving average last week, Frank, but do you think it got enough press elsewhere?
Not at all. No, the major media outlets focused when it went below, but they're just such a doubting Thomases when it comes to gold as an important asset class.
Let's talk strategy now, Frank. In one of your recent presentations, you highlight how it's not about the political party, it's about the political policy. And now that we have had a changing of the guard, Janet Yellen making her debut last week, do you think we'll see some change here?
Well, one of the big headwinds last year in government policies was CPI numbers fell, and interest rates for 5-year, 10-year government bonds and mortgages went up. So this time last year, if you went and bought a 5-year government note, you were losing money, more than 0.5%. And by the end of the year, in December, you were making 60 basis points on your money. That was a big headwind for gold. I think you're going to see that change this year. You're going to see CPI numbers start to rise. And lots of capacity in the economy means rates are not going to rise. So we'll probably see a negative real rate of return, which would take gold up to around $1,400 an ounce.
This year, Frank?
Yes, this year. And I think it's also important for your readers and listeners is that gold's normal DNA of volatility over any 12 months is plus or minus 15%. So from its lows, it's a non-event for gold to rise 15%. If it was to rise 30% in a year, that would be much more significant.
All right, Frank, let's look at the rest of the week now. We have the FOMC tomorrow. On Wednesday, we have G20 meetings starting on Friday. Is there anything you're really going to be focusing on when it comes to gold?
Well, the big part for the FOMC meeting coming up is that there's lots of spare capacity in the economy, but money supply grew rapidly. In January, U.S. money supply at an annualized rate ran up to over 8%. That's significant because when you look at the G7 countries, their average money supply growth has been less than 5%. Now, the 7 most populated countries in the world, China, India, etc., their money supply has been growing at 3 times that rate, more like 15%. And that leads to higher inflation. So now we're seeing money supply rise in America dramatically in the month of January. That usually bodes well for higher CPI numbers, which is probably more bullish sentiment for gold.
All right, Frank, thanks for being with us this week. Final thoughts for investors.
Yeah, look for good fundamentals where there's good management, and those stocks are going to see probably more takeovers this place.
And we will be launching a brand new show with Frank Holmes. Stay tuned to Kitco News for it. We'll be launching it when we're back from covering the BMO conference in Fort Lauderdale and from covering the PDAC in Toronto happening in 2 weeks' time. We look forward to it. Hope you will too. In the meantime, email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. Thanks for watching.